Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. As a reminder, the focus of my presentation and the focus of the Options with Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. Now, I have a two-step process for trading, and the first step is planning, and I use positional analysis, and I look at how traders and market makers are positioned in the options market and how those positions change from day to day to help develop a thesis regarding expected range, trading range, and volatility for the day, as well as a directional bias. And the second step of my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Hero, Spotgamma Hero, to confirm my thesis and for setups for entries and exits. And I think this is a new way of looking at the market. A lot of traders use technical analysis or fundamental analysis. And again, I think this is a new way of looking at the market that can provide a significant edge. And questions and comments are welcome. And I will be watching the Options with Doug chat channel in Discord, as well as the chat and YouTube for questions and comments. So again, your questions and comments are welcome. All right, let's get started. And what I want to talk about today, first, some news items, economic data, key events, and earnings. And we've got a jam-packed week this week. Of earnings, events, and economic data. And then after that, we'll go through our positional analysis. And then after that, talk about some setups. All right, so first, economic data. And this is an economic calendar for the week. And there's one key event at the end of the week. And I'm just going to point out quickly some of these events that are highlighted in red, just quickly here. First of all, consumer confidence tomorrow, 10 a.m. PMI data on Friday morning. And of course, the FOMC meeting starts on Tuesday and then concludes on Wednesday with the announcement at 2 p.m. and then the press conference at 2:30 p.m. So that's the first really big key event for the week. And then the next is the employment situation report on Friday morning at 8:30 a.m. Eastern Time. And so regarding the FOMC meeting and announcement, let's take a couple look at a couple things here. First, this is the CME Fed Watch Tool, And this is showing the expectation for the next meeting. And first of all, this is the current target rate right here, 425 to 450 basis points, that range. And then the expectation is here about 99% confident of a 25 basis point rate hike. So this is what the market is looking for. And notice a month ago there was about a 2/3 chance of this 25 basis point hike and a 1/3 chance of a 50 basis point hike. And now that has shifted to almost 100% confidence in a 25 basis point rate hike. So that is what the market is looking for. And another interesting thing, and this is from the Spotgamma AM Founders Note, and pointing out the very low volatility. This is the volatility term structure for the SPX. And this is showing, comparing the SPX implied volatility at the last December CPI report and FOMC report. That's in red. And notice the contrast to the current implied volatility. Huge difference. This is somewhat unusual, and I posted this a chart of VIX in the Bookmap Discord last week, showing that VIX is at about a 1-year low. So very low volatility going into this meeting. It looks like market participants are highly confident of this 25 basis point hike, and that's what they're looking for, what they expect, and what they're accepting. And then finally this week, earnings. This is a big week for tech earnings, the stocks on my watch list. And first of all, AMD reports tomorrow, and I think these are all after the market close. So AMD tomorrow, that's on Tuesday, Meta on Wednesday, and then Thursday's the big day with Apple, Amazon, and Google all reporting after the close on Thursday. So a big week, a lot of events, a lot of news items, FOMC meeting, employment situation report, and earnings. Okay, so that takes care of that. Let's take a look at our positional analysis now, and I'm going to start with the ES futures, the S&P 500 futures. And the key levels are shown on the chart here. What I'm showing, I have two columns of levels. And the first, these are Spotgamma cloud notes. These are provided to Spotgamma subscribers. They're updated automatically, and they're showing key levels for SPX and sometimes combo levels, SPY and SPX combo levels. And this is showing the 40-50 level, for example. And this is showing the 0 gamma level. And that is a level of 0 gamma. Market makers' position would be 0 gamma at that point. So both of these levels have definitely been in play today, and I've marked some of these. Excuse me. Mark some of these so you can see here that this 40-50 level has been very important this morning. And one thing to note, I think these levels are pretty accurate. Spotgamma is using a 15 point difference between SPX and ES, and that seems to be about right to date. So this 40-50 level has definitely been in play, as well as the 0 gamma level, which is at SPX 4031. And we'll take a look at Hero in a minute, Spotgamma Hero, and see what options traders were doing as price approached these levels. All right, let's step back and take a look at a larger time frame chart. So this is Thinkorswim, and using the notes that Spotgamma provides in a script that you have to manually update it every day, but that's what I'm showing on this chart. So these are the current SPX key gamma levels, and this is showing that, and I posted this on Friday in Discord as well, this rise up almost 150 points from the 3950 level all the way up just below the 4100 level. That was last week. And then SPX gapped lower and has traded again around the 4050 level, and now is around the 0 gamma level. And the volatility trigger is just below that, and that is a Spotgamma proprietary level. That's the gamma flip level, where gamma flips from positive above to negative below, and that's the market maker's position on the gamma curve. So that is again a 1 hour chart, just to get a bigger picture view. And let's take a look now at, this is just SPX, this is a 1 minute chart. And again showing all the interaction, mostly resistance at that 40-50 level, and then support at the 0 gamma level, and then price seems to be breaking below that now. So those are the levels on the charts. And again, we'll look at Hero in a minute and see how options traders were reacting as price approached those levels. All right, shifts in levels for the SPX, very few. And this is something that I look at to help develop a thesis for the day, especially regarding a directional bias. So for the S&P 500, the SPY volatility trigger increased just slightly from 400 to 404, and that's it. And for SPX, the put wall shifted down from 3,900 to 3,800, and that's it for the S&P 500. And it's a different story for QQQ. The volatility trigger, put wall, call wall, and key gamma strike all shifted higher. So that's very bullish for QQQ to see all those shifts higher in levels. And let's go take a look now at the S&P 500 gamma levels. So here is again, these are the absolute gamma levels. What this is showing is positive gamma above the 0 line, that's in the black bars, and negative gamma or put gamma below the 0 line, those are the teal bars. And this is just showing still the dominance of the SPX 4000 strike. And now 3,800 is the put wall. That strike is not really in play today, but that is the strike with the largest net negative gamma. And again, 4,000, that's very obvious as the strike with the largest absolute gamma, so that's the absolute gamma strike. And then here's the call wall at 4,100. So that is SPX. Here's SPY. And 390, that's the put wall. 400, the key gamma strike or the absolute gamma strike. And then 410 is the call wall, and that's the strike with the largest net positive gamma. So the put wall can be expected to act as support, and the call wall expected to act as resistance. All right, let's take a look now at QQQ. So there's just looking at SPY here, there's still a lot of put gamma below this 400 level and call gamma above. And SPY is still in a negative gamma. The market maker's position and SPY on the SPY gamma curve is still negative, just slightly negative, and positive for SPX. And let's take a look at NASDAQ now. So this is QQQ. 280 the put wall, strike with the largest net negative gamma. And now the 300 strike is the call wall and the key gamma strike. Let's just take a look in Equity Hub, take a look at QQQ. Still put dominated. And the thing that I'm looking at here is the 5-day history. There's the rising key gamma strike, the rising hedge wall or volatility trigger. So for QQQ, it's actually a volatility trigger. And the rising call wall and the rising put wall. So just looking at this is very bullish. All right, let's take a look at data now. So, the thing that I want to look at is gamma notional. And we'll look at SPX on the left here, and that's gamma notional for this morning. And I compare morning to morning. So I'm going to compare the number Friday morning, the gamma notional from Friday morning to this morning. And this is the market maker's position on the gamma curve, and it's positive for SPX. So that means that market makers are in the positive gamma or call gamma region of the curve, and they will be trading against price to hedge their delta exposure. So as price increases, they will need to sell futures to hedge their delta exposure, and as price drops, they will need to buy futures to hedge their delta exposure. And it's just slightly the opposite with SPY. So on Friday, gamma notional for SPY was minus 153. Today it's minus 250. So both have gone, SPX gone lower, just a little bit more, less positive. And then SPY is a little bit more negative. So again, SPY is shifted from minus 153 to minus 150. And then for QQQ, it's 0. So this is not indicating that there's going to be a for the indices SPX, SPY, QQQ, not implying a lot of movement. So my takeaway from this is a lower volatility, lower trading range today. And let's take a look at the Vana charts. And this is these are simple charts that confirm that information. So this is SPX. This shows market makers, delta exposure, delta notional, and how it changes with changes in price that's shown on the horizontal axis, and changes in implied volatility, and that's shown by the green line, and that's the Vana effect. Vana is a second order Greek that indicates the change in delta with a change in implied volatility. So there's SPX, again indicating market makers delta notional will increase as price increases, and they'll have to sell futures to hedge their delta exposure. And just the opposite with SPY. Market makers delta notional increases as price decreases. And then totally neutral for QQQ. So again, all of this, when you combine SPX, SPY for the S&P 500, I take that as somewhat neutral, as well as QQQ, somewhat neutral. And then finally, I want to take a look at my, and thank you to, thanks to Spotgamma for this chart. And then finally, this is my key gamma strike spreadsheet, and I keep track of this every day, and I track the key gamma strike for all the stocks on my watch list for the current day and the previous day. Those are shown on the right two right columns, and then I color code the number green if it increased or red if it decreased. So this is somewhat bullish, but not outstandingly bullish. And one other thing that I want to point out. So altogether, so my thesis for the day for S&P 500, I really didn't have a directional bias. I was just looking at watching Hero and seeing how price reacted at the key gamma levels, and it certainly did. The having those SPX levels on the ES chart, as well as I now put them on my SPY chart, was extremely helpful, and I'll show that a little bit more closely. All right, so one other thing that I want to point out is last week how bullish it was. So this is maybe a little bit hard to see. This is a Thinkorswim chart, and what I'm showing over here on the right, this price scale is percentage, year-to-date percentage. So, you know, again, I'm sure this is very difficult to see, but this is showing for QQQ that it is up 10% for the year, and it was up, you know, if you look at the close on Friday, it would be even higher. So this is in the first month of the year, QQQ is up 10%. Let's look at SPY. Here's the number, up about 5.6% for the year. And let's look at a couple of stocks that were pretty crazy last week. Tesla. I think Tesla was up 30-something% last week, and then currently up 57% for the year. And here's Nvidia, up about 35.5% for the year. So that's interesting, just kind of an unsustainable pace. All right, let's take a look at Hero and look at some setups now. And first of all, the S&P 500. Let's look at SPY. This is usually what drives the ES, the S&P 500. And I'm going to zoom in a little bit on the morning. And the thing that I really like about trading the S&P 500 is the Hero often acts as a leading indicator, and looking at the levels on the chart, especially the SPX and SPY levels and the Spotgamma levels, you pretty much know where price is going and where it's going to react, and this gives you a leading indicator to look for those levels. So first of all, confirmation in the morning, traders were taking positive delta positions, and then as price approached that 40-50 level and 405 on SPY, traders started fading that move and taking negative delta positions. And then as price dropped down toward that 0 gamma level, traders started taking positive delta positions again and setting up a long setup. So bullish confirmation for the first move up in the morning, and then a bearish divergence, setting up a short, and then price moves higher again as traders take positive delta positions. So let's go take a look. Now, one thing to keep in mind is that I'm going to jump from chart to chart, and that's going to make it a little bit difficult to look at. When I'm trading, I have, when I'm trading, I have this Hero chart up on one screen and either ES or SPY up on another screen. And what I actually did today, I also have another computer, and I had Hero up on that computer, and then separated out Bookmap charts, ES on one chart on one screen and SPY on another screen, and I could see everything that way. So let's take a look. We'll take a look at ES and SPY. Remember the turning points here. The first at just after 10, and then the next was around 10:50. So let's go take a look at ES now. So here's the first reversal. I'm going to zoom in a bit here. And a couple things to point out. Just looking at order flow in Bookmap, you can see that this light blue line is showing iceberg orders. So large traders were fading this move. They were selling into strength, and that's pretty typical. And then price starts to roll over. And again, remember, traders were all already taking negative delta options positions. And the dark blue line is CVD, that's cumulative volume delta, and that shifts down. And then the yellow line is showing stop orders. So sell stops start firing. So we already knew that traders were taking negative delta positions. They were buying puts and or selling calls. And we'll take a closer look and see exactly what they were doing. So here, order flow in Bookmap is confirming what options traders were doing, and price shifts and moves lower. And notice it did get above the 40-50 level, did a retest, and continued to move lower. And scroll just a little bit here, and then this reversal higher right at the zero gamma line. And notice the large traders coming in now with buy icebergs. So they were selling here into strength, and then they start buying into weakness as price approaches the zero gamma level and reverses higher with this 40-50 level as the target. So about a 20 point move higher in the SPX ES from the zero gamma level to the 40-50 level. Again, Hero's giving you a clue. This is, remember we looked at traders started taking bullish options positions, positive delta, as price was falling towards the zero gamma level. And then, so we're looking at that level and also the ES 40-50 level, but I think generally the SPX levels are more important. So as price approaches that level, traders are taking positive delta positions. Large traders start buying weakness with iceberg orders, and price reverses at the zero gamma level and heads up to the SPX 40-50 level. Two great setups this morning. Let's take a look at SPY. And sometimes the levels that are important for price action also occur at SPY levels. So here's that reversal. Remember, for ES, for this first reversal, there's no clear level shown here. But you go to SPY, and that was exactly at this 405 large gamma 3 level. So that is a spot gamma level, and LG3 means large gamma 3. That's in the range of 1 to 5 being the largest amount of gamma, and 5 being the lowest. So this is again a 3 level. So there's the price action in SPY reversing. So that's why I'm looking at SPY on one screen, ES on another screen, and Hero on another screen. That gives me all I need to know to trade the S&P 500. And you can trade that in any number of ways. You can trade ES, you can trade futures, SPY shares, SPY options, SPX options, any number of ways to trade. And one thing that I did today, and I find this helpful, I have now added the SPX levels to my SPY chart. And I do that in my C levels column here, and I had that for ES as well. This is an add-on that I use, that I have a spreadsheet. I enter the numbers in the spreadsheet, and then it it shows the numbers in this column and also draws the horizontal lines, which I like to see on my charts. Okay. So again, looking at the S&P 500 traders, let's go back and look at Hero again. Clean this up, zoom out. Clear divergent setups this morning. Again for the short and the long. And what I normally do in the afternoon, if I see Hero doesn't have as much movement as it did this morning. This is because I'm looking at a full day look back period. So this is cumulative for the entire day. And one thing that you can do to get a little bit more clarity as the day goes on is shift down the time frame. And here it looks like options traders are still not doing much after this morning move. So there's not a lot of clarity from Hero for anything in the afternoon. And so the question in Discord, sell stops to open and close, and I'm not sure I understand your question. All right, so let's move on. Let's look at a couple of other setups. Here's QQQ, and remember the shifts in levels higher were definitely bullish for QQQ. So morning confirmation didn't last long, and options traders start fading the move, and price follows soon after. So they were taking negative delta positions. And let's just see what they were doing. Yeah, the 30-minute window gives a better clarity even in the morning. So they started buying puts and selling calls in the morning. Let's go take a look at Bookmap, look at QQQ. So it looks like now they are actually taking positive delta positions again. Let's go to Bookmap. And there's a question about Tesla, and I'll take a look at Tesla next. So this chart looks pretty similar to the S&P 500. Reversal lower at the volatility trigger as traders started taking negative delta positions, buying puts and selling calls. A little bit of a reversal higher, and then chop between 291 and 292. All right, Tesla, definitely a good short setup this morning. So here's Tesla. I'm going to zoom in on this. So first of all, price targets at 170 being the primary target this morning, And there's liquidity at almost every round number level. Let's go take a look at, we'll take a look at Hero. Take a look at Tesla. And it looks like traders were taking negative delta positions pretty much from the open. And let's see. So they were definitely buying calls. They bought buying puts. And they bought calls very briefly for the first maybe 4 or 5 minutes and then started selling calls. So Hero is definitely showing bearish hedging flow. All right, let's take a look at Bookmap now. Go back to Tesla. And the order flow is definitely bearish as well. This is cumulative volume delta sloping down. You can just tell all the pink dots in there. Those are market sell orders. Let's make the dots a little bit bigger. They're a little bit easier to see. The thing about Tesla, let's say opposed to the S&P 500, is often gamma levels are not in play like they are on the S&P 500. That's one thing that I really like about trading the S&P 500 is the levels that are in play are important. And again, you have a good idea based on what options traders are doing and what large traders are doing with icebergs and what smaller traders are doing with stops, how price is going to react at those levels. So anyway, here's Tesla, definitely bearish setup today. Hero providing a strong confirmation, and then price targets. Clearly visible below, all the way from 175 down to 170. And this is understandable. Again, remember, Tesla, we looked at it a little while ago, was up, what, 56%, 57% for the year. And, Friday it was up even more, maybe 60% for the year. That's 1 month, and 30% last week. So, it's certainly understandable that traders would take profits. So there's Tesla, short setup, a lot of nice trend breaks, price targets below, confirmed by hedging flow and order flow. All right, there's a question, let's see what Tesla's doing now. Notice all the pink dots there. Tesla order flow is still bearish. Let's see what options traders are doing. Still bearish. Let's look at the total signal. That helps a little bit. So overall, though, still, I think, again, we saw that order flow is still bearish. Pink dots, falling CVD, and then Hero is making a series of lower highs. And when you change the look back period to 1 day, still definitely bearish. All right, so that's Tesla. And let's take a look at Nvidia. And another bearish setup. Hedging flow remains, let's look at it, remains bearish. And let's take a look at Bookmap now. There's a lot of pink dots there. Here's Nvidia. A bit of chop in the morning. There's a reversal at here's the 200 call wall. And a reversal lower at that level. All the pink dots start to come in. I'm going to zoom in on this first move lower so we can see that a little bit more closely. For the move down from 200 to 195. So it moved from the call wall down to the 195 hedge wall and the liquidity there. So other than this brief move up to 201, this is kind of a some kind of wedge pattern. Lower highs, finding support around this 198 30 level, and then a break below. So a couple ways to take this. One would be assume the call wall after this move up and a retest was going to act as resistance, and then a break of this pattern at the 198 level with a primary target at the 195 hedge wall. Let's go back and take a closer look at Hero. We'll zoom in. So this is the first move lower in the morning. And traders were selling calls and buying puts. And here, if you were looking at a 30-minute look-back period, price is approaching the 195 hedge wall liquidity level, and you see that traders start taking bullish options positions there. Good time to get out. That's that's an exit signal. Okay, those were the best setups of the day. Actually, let's take a look at one other. Snowflake. And that's on my other computer. Let me I'll need to share my screen. All right, so there's Snowflake. Oops. Let me try that again. Okay. Sorry about that. So there's Snowflake. So the quick move up in the morning, trend break, retest the 158 level, and a move down to liquidity at 155 and the 153 level. Let's go take a look at Hero and confirm by options trades. So confirmation here, nothing like the lead effect of the S&P 500. But a nice move lower. All right, I've got a couple minutes left. And are there any stocks on this list that anybody wants me to take a look at? Here's Meta. Primarily calls driving, traders selling calls. Let's take a look at Bookmap. Oh, Amazon. Okay, we'll take a look at Amazon. Let's take a look at. So here's Meta. And quick move up. Trend break. Breaks the 150 call wall. And liquidity targets down below at 149, 148, and 147. And hold on, I seem to be having a not sure I'm seeing the correct screen on YouTube. I should be showing, let's go to Amazon. Okay. All right, so here's Amazon. Let's go take a look at Hero. Strong confirmation. Up and down. Looks like mainly driven by calls in the morning. Let's go back and take a look at Bookmap. And like a lot of other stocks, early morning enthusiasm, trend break. Reversal lower. First target at the 100 call wall. Then the next at the 99 liquidity there. A lot of pink dots, pretty bearish order flow. Except for that reversal there and the big green dot. Go back and take a look at Hero. Looks like a little bit of a divergence reversal higher. Traders started taking bullish, positive delta positions, and then price reverses higher a little bit later, a few minutes later. And that doesn't really provide any additional clarity. Okay, we've looked at all the stocks that I wanted to look at. And that is pretty much all that I had. So again, I think for me, ES and SPY was by far ES, SPX, SPY, however you want to trade the S&P 500, was the easiest to read by far for me. So there's a question in Discord to look at ES one more time. So we'll look at SPY. We can take a look at ES too, and this combines the SPX and SPY signal, and it generally looks just like SPY. And this is this number is in dollar terms, total cumulative Hero. This is very low. Traders are not, apparently are not committing much before the FOMC meeting. You know, it could be most likely zero DTE options traders today, as it has been for the at least past week or so, coming into FOMC and the employment situation report on Friday. Traders are not committing much to long-term positions. And let's go take a look at, we'll take a look at Bookmap one more time. Let's just take a look and compare that number with SPY. So even lower with SPY. So interesting. I'm looking at this dollar term here. Now it's less than 755K. All right, let's go take a look at Bookmap, and then we'll call it a day. So here's ES. It looks like it's finally broken through the 0 gamma level. And there's a pretty clean trend line lower that has gone lower now, and it looks like the next target below is the volatility trigger, and that is the next support level below at 40.20. So that's actually the first support level. The Spotgamma support levels today for SPX were 4,000, 4,015, and 4,020. Let's take a look at SPY. So for SPY, the next level down is the 401 level. All right, so that's it. That is the one last look at the S&P 500. And Jonathan asked, this is when dealers flip. And yes, that is the volatility trigger. That is Spotgamma's proprietary gamma flip level, where in this case, that's for SPX. Their position on the gamma curve would shift from positive above to negative below. Okay, I think that's all the questions. That's all I had. And again, remember FOMC on Wednesday. That will be during my session, and we'll watch the S&P 500 and also Hero to see how options traders are reacting after the announcement, and also the start, and then we'll wrap up just as the press conference starts. So thanks for your questions, comments, and thanks for watching, and I will see you tomorrow. Thanks again. Bye.